Hi everyone, and welcome to the second of today's webinar, where we'll be looking at Forex as the start of the US session. But before we do, can I just remind you, as always, and draw your attention to the disclaimer that I know you can see on your screens. As you know, this can be a very risky business, so please don't ever think of using money that you cannot afford to lose. And as always, the session, today's webinar, we'll be doing it together with my husband David. Here we are, and we will be looking at the charts through the prism of volume price analysis, supported by our quantum indicators. And those of you who perhaps have never come across the methodology before, it's all explained in the various books that are on Amazon. And for Forex, what we've done is we've bundled everything together into what we call the complete Forex trading library, because VPA is your, if you like, your the foundation of your technical analysis. And onto VPA you can then add standard indicators. In fact, those of you who come along will see on my charts, you will have noticed I use a moving average. There's even some fractals on there. When you look at David's charts, he just sticks to the indicators that we've developed for quantum trading. But it's really very much up to you. The methodology allows you to do this because what it does, it gives you a deep and intimate knowledge of the relationship between a price action and volume. But that's only one element of what you have to know to understand and trade this market. That's the technical analysis side. There's the fundamental side, and there's what we call what's going on in the related markets, to give you what we call a 3D, a three-dimensional approach to Forex trading. And there's actually a book called A Three-Dimensional Approach to Forex Trading. But lately, we have also added a fourth dimension, and that is the political risk. And the political risk, as you know, is Brexit. There's what's going on with the tariff situation, the tariff wars. And to this, we must now add, particularly today, what is going on again with Italy and the threat by the EU to impose fines because Italy is not abiding by the fiscal rules. Its budget is all over the place and doesn't fall in line, as I said, with the rules set out by the EU. In defence of Italy, and not just because I'm an Italian, they're not the only one who have ever broken the fiscal rules. However, France they're sailing perilously close to the wind, and I think at some point Germany did it as well. So they're not the biggest sinners in the Euro project, but they're certainly being made an example of at the moment. And one of the sanctions is that they will be fined, I think, something like 3 billion euros, which I find a bit odd, given that they've got a problem with debt, and they basically, they have a problem with their debt. You then go and fine a debtor yet more money. So where that money is going to come from, I don't know. But it's kind of been bubbling in the background for some time with Italy. First with the banks, and now this this spat that has come about since in the last few months. So certainly one to watch. And obviously with the euro today, we've had the interest rates, they're staying the same, but the event that everybody's now waiting for is the press conference at 1:30. And obviously with Mario Draghi, he's kind of running down into the time when he's going to come to the end of his tenure, which is, I think it's October, and the next whoever takes over at the helm, it's all very, very political. Of course, Draghi being an Italian, and the Italians are really upset, I think, that I don't think they're going to have, once he goes, I didn't have anybody at the ECB, David. So it's all, as I said, political risk is the overriding theme for all the markets at the moment. With regard to the Forex, this is a slide from our education program where everything is sort of brought together in greater detail. You can start with the books, and I know we have a lot of students who have started with one book, then they've bought another book, and then they have migrated to the indicators and ultimately to the education program. And this is just a slide from one of the thousands of slides that just explains that, that we have to understand why all these markets are interrelated, what is driving the markets at the moment. As I said, there is political risk as well. And at the center of all of the financial markets is the Forex. It's the money market. It's where we have sentiment reflected. It's the flow of money. Money flows to either for a return or to a place of safe haven, and that could be a bond, or it could be a currency such as the US dollar or the Japanese yen. And for the Forex market, these are 4 of the specialist indicators that we have developed: CSI, matrix, array, and heat map. In these sessions, we do try and cover them all, but because of the time constraints, realistically, we tend to start and focus an awful lot with the CSI, because that is the one indicator that we believe, David and I believe, that all traders should have some indication. It helps to kind of deconstruct the market into the individual currencies and see what's being bought and what's being sold. And when we look at my charts later on, you'll understand how just, you know, what a gift it can be to give you that insight, but not just the insight, but the speed of the insight, and also tell you what is moving, and sometimes more importantly, what is not moving. You can buy with the quantum trading, you can buy just one, you can buy a bundle, or you can buy the full package. There are lots of advantages for having the full package. For example, you get all future indicators free. As we develop more of them, they're automatically added. All upgrades are included for free. Everyone gets 24/7 support for life, and everything is covered by a 7-day money-back guarantee. And at the moment, the platforms that we have the indicators available for: MT45, Ninja, TradingView, and we are now working on TradeStation. You can, if this is the first time to one of our sessions, then you can just hop over to quantumtrading.com. All the information is on there, the videos, the support pages, and of course the prices as well. And as I said earlier, we now have a Forex program that includes all the package of trading indicators. You choose the one you want, whether you want to use the Ninja MT45. You can change, you can swap from one to the other. Sometimes there is a slight price difference, and we certainly don't charge for changing from one package to another. And if you've bought anything from us and you want to either upgrade to the package or the program, you of course get the credit for what you have purchased already. And as David and I say, what the program endeavors to do is really to tell you, to give you the skill and the knowledge that you need to trade the Forex market with confidence. And that website is quantumtradingeducation.com. But at the end of this session, this webinar session, if you want more information on anything we've covered, either to do with the indicators, the program, anything we've said, you can either email me, Anna@annacooling.com, or David@quantumtrading.com. David, is there anything you want to add to that? No? Is that okay? That's it, fine. Okay, I'm just going to stop there and pass you over to David while I set up my charts. So there is actually very interesting stuff going on. This is the workspace I had this morning. I've developed a particular workspace for MT5, which I'd like to share with you. We were waiting this morning for the reversal on the pound yen. This is the 30-minute CSI. Here we have the yen. It was rising. We were waiting for the turnover. The pound was being heavily sold. And now, as we come to the new session, the crossover to the US session, we've had, well, there's certainly a change of sentiment earlier on. Whether that's going to carry on into, into the full open of New York, we will have to wait and see. And of course, we're waiting for Draghi as well. But we'll move over to Ninja to start with. Is that okay, David? Yeah. We'll move over to Ninja, and then we'll come back and I'll just run through this workspace that I've put together.
Should be coming up any minute now, hopefully. Get rid of that. Move that out of the way. Very warm welcome to you wherever you are in the world. Good to have you along with us today. Just move that down there. I wanted just to get into this because there's a lot going on right now for various different reasons, and also some interesting lessons in terms of what's happening on the currency strength indicator, the matrix, and onto the charts themselves. I've pulled the euro dollar up here purely because we're into the US session. I'm looking at the what's going on in terms of the dollar, and also particularly the euro, particularly as a result following the interest rate announcement, which was to some extent pretty much a non-event. What will follow in the press release, which is coming up in about half an hour, the press conference rather, is much more relevant and will have a greater impact on how the markets react. But I wanted to pull this up because it's quite interesting. This is euro dollar. Now, there's been a modicum of a trend higher, a lot of volatility, as you would expect following such a release. But now the markets are calming. But what's interesting about it is that obviously we've got volatility across the time horizons. This is the 1 minute, the 3 minute, the 5 minute, down onto the 15 minute, and obviously you've got volatility, an absolute ton of volume coming in, and indeed over onto the 30 as well. So we've got the VPOC in play pretty much universally across all the charts, right the way out to the daily. We've got volatility, we've got congestion building, we've got support and resistance all over the place. But what I really wanted to show you was just to head over to the CSI, because, just flick that up there, this is a 5 minute CSI. Now what we're seeing right now is, yes, there is a marginal trend, but if you look at what's going on in terms of, we've got heavy dollar selling and we've also got significant euro selling. Now, what that reveals is that that is not the best pair to trade, because whilst there is an opportunity to make some money there, it's certainly not the best by a long, long way. And yet, even though these two are traveling in the same direction, the red line, the dollar, and the orange line, the euro, there is a marginal trend there. And as I explained this morning, there is a differential between the two. It's two trains leaving a station at the same time, maybe one traveling slightly faster than the other. And that's what you're seeing right now. But in terms of the opportunities to trade, far better opportunities, for example, with the Swiss franc, which is being bought really strongly. So if you were to look at a chart of the dollar Swiss, for example, dollar falling strongly, Swiss franc rising strongly, you know, that is certainly one of the pairs to consider. Also the Aussie, similar picture. The Aussie is a strong buying coming in a few minutes ago, and that is counterbalanced by strong selling on the dollar. So you pick your pairs with care, and you always start with the CSI. Just go up to the 10 minute. Similar sort of picture you can see here. The dollar's falling with the euro. Very, very strong buying in the Swiss franc. And equally, there is quite a strong sense of positive sentiment towards the pound as well, following Mr. Carney's comments. So you're really spoilt for choice here. And up onto the 15. And there it just reinforces the picture. If you were looking at the dollar Swiss as an opportunity, then clearly on this slower time frame you've still got some way to go, some way for the Swiss franc to get up into overbought, and some way for the dollar to continue down into oversold if it's going to continue that far. And you've got other opportunities here. You've got the Canadian dollar, this purple line is diving quite sharply too, and you've obviously got the yen diving down here as well. So there's plenty of pairs to pick and choose. But it was just interesting. If we then go to the currency matrix, really all that is revealed on the matrix itself too. This is actually loaded up onto a dollar, the Aussie dollar chart here. You can see this is 5 minutes. So what you're looking at on the right here is the move in the Aussie dollar, the buying of the Aussie and the selling of the dollar. And you're seeing this strong trend higher. But if you look over on the currency matrix, which I've got loaded on that particular pair, right down at the bottom here, you can see you've got the Euro Swiss, which is really demonstrating the strength of that particular move. Here's the Euro dollar really sort of flopping around mid-table. As I say, there is a marginal trend there, but look at the difference in the values. This is minus 32, this is only minus 4. And what these values indicate is the extremes to which you can expect a currency pair on the ladder to move to. So when you're using these regularly, and in fact it's something we're looking at doing, is really adding how to describe it, it's like the CSI, for example, has the extremes at 80-20. What we want to try and do is give you a sense of when these pairs are reaching these regions, in other words, the numerical values, which may be significant. For this example, it could be, let's say, 28, 29, 30 maybe, and maybe have a little table alongside which says, okay, these are now approaching quite an extreme numerical value for this particular time frame. Obviously, as you move up the time frames, if we go to the next one, which is 10 minute, I think we just isolate out the euro again on that. You can isolate any pair. And obviously, in looking at the currency pair, if you were looking at the euro dollar, you'd isolate out the euro first, see what that's doing. You can see here again, we've got the euro Swiss down at the bottom. Euro dollar is very weak, sort of mid-tablish at -2, and again -24 here. And you do the inverse of that. You'd go back to the currency matrix and then isolate out on the dollar to check out what the dollar was doing, which you'd also do on the index, which comes with part and parcel of the quantum trading indicators. Up onto 15. Oh, time frame for the CSI, I beg your pardon. I've got 5, 10 and 15. That's on 5, that's on 10, and that's on 15. Same on the matrix. 5, 10 and 15. Sorry, did you want to cross-check something? Oh, have I got the wrong... I've probably got different notations. I beg your pardon. The euro is the orange one here. This one. Let me just check. Hold on a minute. Let me just check this out. On the 5-minute chart, yep. The euro should be right at the top. Oh, right. How strange. How weird. I'm going to pass back to Anna. I'll just check out everything's connected. Certainly the live feed's on, but let me just check anyway. I'm just going to pass back to Anna on MT5. Hold on.
Thank you for that. David has had problems this morning with your Ninja in this morning's webinar, and he's just sorting that out. He's going to try another feed on Ninja. Have you got TradeStation running on there as well? Have you got? No, we're running so many platforms at the moment, especially on his side. Right. Very, very quickly, well, let me just quickly run through this. In fact, what I'll do is I'm going to leave. This is the pound yen, and as I said, the workspace that I have put together as a way of using multiple time frames, the CSI, and also the Renko chart with a time chart for finding trading opportunities. And what I said earlier on, I have the 30-minute CSI here. On the same chart, I also have the matrix, because what the CSI does, it isolates the individual currencies. And we can see here, this was from this morning, where the pound was in a very, very heavy sell, and at some point we were waiting for a reversal. Well, that certainly has happened, although, as always with the pound yen, has been accompanied with a degree of volatility. This is the buying that's come into, I think the euro dollar certainly went down when at the initial release of the interest rate, but it was a non-event because they kept they kept the rate the same. But I think it's one of the other numbers that have come in, either the refinancing rate or the one of the rates they use for the banks, that's come in slightly differently, and that's apparently caused the euro to shoot up, which is what actually you're seeing on your chart. But at the moment, in fact, the pound and the euro, if we look at them together, what we also said was what the CSI is also telling you not to look at. And certainly on here, when the lines are moving in the same direction, you know, it is telling you it is either in some kind of consolidation or is at the very least range bound. So that's what I've got there. I've got the 30-minute. I have a 30-minute chart, which is my benchmark chart. Now this one I've actually put the Camarilla levels on because I don't use Fibonacci. We have our own SNR indicator where we have strong lines and not so strong lines. You can see here this morning the price actually bounced off one of the strong support lines at 136.98. If it's a solid line, it's very similar to the accumulation and distribution indicator that David has on Ninja, and what it does, it really does, it's pinpoint accurate, and when the line is a thick line, you know that it is a strong level, and here it certainly was, because actually the price bounced 3 times on it, and we did actually get the first sign of this reversal. I've also have the volume point of control on here, which also gives us support and resistance through the prism of volume. I've put the histogram over to the left of the chart here. This is the yellow VPOC itself. The shaded lines are other support and resistance. You can take these off, by the way. They're very, all our indicators are very, very flexible. If you didn't want so many lines on your chart, personally, it doesn't bother me, but other, you may have a different approach to the lines on your chart. To get back to the S&R indicator, this is the hashed line, which means it isn't as strong as this one here. This to the top side, we have one here, and we have up here the high, which is 137.775, and it looks like it's trying to move higher. Now the Camarilla, what it does, the Camarilla, it gives a kind of hierarchy to these lines. There are when the price is trading between the R1 and the S1, it could be said to be in a congestion. It's a buffer zone. Then we have the the fourth support, S4 and R4. These are key levels. We've actually got 6 levels on the Camarilla. What it does, it just gives you levels that the price is potentially going to reach either one way or another. In fact, it's sort of bounced off the R3, and it's been accompanied with a volatility. You've got 2 big volatility candles on this particular chart. But what the 30-minute chart, it gives me my benchmark, and what it tells me is what sort of price action am I seeing on the slower time frames? Am I seeing rotation around the volume point of control? Am I seeing a lot of volatility? Am I seeing the price action in some kind of trend, for example? So it gives me a framework for the price action in this slower time frame. Now, it could be completely different to what is going on in an even slower time frame, but for me, I have, as David said, I've blinkered myself. I am restricting myself to the 30-minute chart as my benchmark chart. So I'm looking at this and I'm saying, well, it has been a move higher, certainly a break from the volume point of control, but it's been on volatility. So it's been a trend, but it's very volatile. How that is, what happens then on the faster time frame is that volatility is also picked up. There's a lot of choppiness. Stops will be taken out. You could have all sorts of issues in the faster time frame, but at least I know, and I can then take a decision, and I can say, do you know what? I know there's volatility on the 30-minute chart, but I still think there's enough of a trading opportunity. And here we have a really classic case of, this was this morning, this was the move lower. In fact, I said this was a kind of, not like an accumulation, but a sort of certainly a pause point. There was a lot of volume came in on the pound yen. This was the move higher that we were waiting for, and it did kind of move higher, but look, it kind of went into a long period of consolidation. We can see it's around the VPOC. The good thing about the VPOC is at some point it's going to go one way or another. It may go smoothly, or it may go with volatility, and this has certainly been accompanied with volatility. The trend monitor dips in and out of the different colors. You don't have a nice solid block of color to tell you that we've got a nice move high. If you compare this move higher that we have here with what we're seeing at the moment, we have a block of color and we have a block of color here. But look, once it moved away, it was on volatility, spiked higher, volatility, straight back down again. Lots of traders being trapped in this candle, stops taken out, stops washed out. But do we know it's going to carry on higher? Well, look at the subsequent candles. You've got 3 down candles, but look at the volume underneath it. So yes, it's snapped back into the range of the candle, but with not enough volume to take it to take it back down to the VPOC on this move. It actually moves sideways, which it often does. Then we have some more down candles, but not a lot of volume associated with the candles. So, we know it's bullish. And in fact, our CSI is telling us this because there was buying of the British pound while this price action was underway. And what we have at the moment is pushed up again on volatility, a lot of volume underneath it, and again pull back into these highs. Again, look at the volume underneath it, lower, certainly more than on these down candles, but it is still it's still still lower than the volume on the up candles. What we need to see, if this is going to reverse from here, we need to see this the volume on the down candles increase substantially. So moving to the Renko, where everything is smoothed out with the Renko. This is the whole point of the Renko chart. Renko chart is there, smooth out this volatility and keep you, first of all, help you get into a trade, then keep you in while you see all the choppiness going on in the time charts, and then also help you get out. And as we can see here, how do we use this? Use it very, very simply. We need to see an agreement between the trend dots and the trend monitor, and you stay in until there is a change to either the brighter colors, or if you feel you don't want to wait for that, you can actually come out on the in-between color, as it were. I've actually put a VPOC on here as well, because it also it helps me define points on the chart when it's likely to be going into congestion. Now, this move higher, it's actually, you see the trend dot changes first. We had the first bright blue, we could have gone in here, but then what happens? Price goes sideways. Now, we don't actually have a red dot in any of these. We don't have a red down here, although we have two red dots here. Notice where the dots are on the bricks themselves. If they're beneath the bricks, then that is also telling you the price is likely to go higher. Look at the trend dots on the bricks at the moment. They're at the top of the bricks. Now that's saying that there is downward pressure coming into this price move, but this hasn't changed. The trend monitor hasn't changed as yet. And you would also always consult what is going on the CSI. This is a 30-minute CSI. The pound is still rising, the yen is still falling. I just move it down to the 15. Here we are. There's the pound almost at the top, but the yen is still falling heavily. So it's just a question of balance, if you like, is taking in all this information and just not reacting to it, but absorbing it, understanding the VPA element of it, and also understanding what the indicators are telling you. Because this move here, even if you were to get in somewhere at this point here, where are we? What's the price on here? This is 137.24, and you had actually just stayed because, as I said, there's no change here. 137, what did I say, David? 137.24. It's about 30 odd pips. Yeah. 30 odd pips. So this is just one way of using 31, the, pardon? 31. And, you know, it is possible to do, but you have to be aware of what you're looking at, have the correct indicators, understand what is happening when volatility is triggered in the market. The Renko will certainly help to keep you in. If you just use a time chart and you see this type of price action come in, shooting up, then straight back down again, we have the volatility. We know that's likely to happen because we have the volatility indicator. That is what sets the heart race, you know, the heart racing, the mind thinking, oh, this is it. I'm going to be stopped out. I'm going to be stopped out. That's, you know, you don't want that. Huh? Yeah, hold that. David wants to talk at this chart at the moment. That you don't want that. What you want is be able to assess what you see on the chart. Yes, there's volatility. Yes, there's uncertainty. But if you understand price action and you understand the relationship with volume, and you have indicators such as at least some of the ones from our quantum tool set, it will just helps to calm the emotion. This is an emotional business. Life is emotional, but this is even more emotional than most businesses, as it were. Just stay here. Is that okay? Yeah. Okay. Oh, sorry. Just to finish off, what I also have, but I have them on a separate screen on this workspace. I have the heat map, and I also have the array, which I can also consult to give me a sense of the momentum or not that is in this pair at the moment. And as I said, I've got the 3, the 30, but I can always go up to something like the, say, the 12-minute chart, tell me what's happening there, just to look at the volume profile with the candles. But as I said, I like to use the 3-minute with the Renko. Not too many charts, as I said, for entries keeping in, and certainly with exits. But this is a tricky pair. There's probably, I would say, you get much smoother price action on other pairs. So anyway, but I'll stay here. Do you want to say something, yeah, David?
Thanks, darling. And apologies for the most peculiar. I changed feeds and it all updated, even though it was updating live. Oh, sorry. I've got my microphone open. Yeah. No. God, it's all technical problems today.
Oh, I can hear you now.
Yeah. Apologies. Anna said she couldn't hear me, and the reason was one of the plugs had fallen out of the amplifier. Yeah. Yeah, fine. Really odd on the Ninja. I had 2 feeds. I've got 2 feeds on there, and one of them was it was updating, but I switched it to the other one and updated. So for some reason there must have been a glitch on the feed. Very odd. Never had that happen before. So apologies about that. All back in line now. And I'm just looking at mine, and exactly the same as Anna's. What's nice about the CSI right now, if you're a reversal trader and you're looking for that is your tactical approach. And I have to say, my eyes are always drawn to the top and bottom, the extremes, in other words. That's where I always focus. You've literally got a bunch of currencies going to the bottom and a bunch of currencies going to the top. So the next sort of 5, 10, 15 minutes really spoiled for choice in terms of reversal opportunities, of which one of them is potentially developing on the pound yen on this particular time frame on the 3-minute. And part of the reason it's developing is because if you look at the volume profiles below, and in particular the last 2 blue up candles, the widespread up candle at the top there, followed by the narrow spread, no, sorry, not those 2, further back going, sorry, I keep going back, those 2, that one, the widespread up candle there, look at the volume associated with it. It's above average, but you've got a widespread in price action. Then look at the next candle which follows, which is a narrow spread candle, decent wick to the upper body, but look at the volume. It's 1 1/4, 1 1/3 times heavier. So if that is a comparable volume and comparable price action, what you should expect to have seen would be the price moving swiftly higher against the price action of the previous candle. In other words, that price action bears no relationship to the volume. It's an anomaly. And what's anomalous about it is that infers that there is heavy selling going on in that candle, because if there were not heavy selling, then the price action should have closed much wider than the previous candle, and it hasn't. It's closed with a narrow candle, so therefore there must be selling in that candle. In other words, the market's struggling to generate upwards bullish momentum, and the market makers are selling into that weakness, which they've done, and they're now taking it lower. In addition to that, you're also hitting that resistance at 137.67, denoted with the solid line. That solid line is on the support and resistance indicator, which works off price. So in other words, every time a level is tested or retested, it becomes significantly deeper, and that is represented with a solid line. The dashed lines are areas where you have support and resistance, but they are less well defined. In other words, they're not so strong. So when you get the solid lines, and particularly where you get clusters of solid lines, which you had around the spot 16, 19, and 22 there, that cluster of solid lines is a very, very strong platform of potential support. So had the market, in this case it didn't, it just flip-flopped around at a slightly higher level. But had the market reversed down to those levels and you'd wanted to take a trade to the upside, they are very strong and a very good place to position any stop loss, provided it fits your money management rules, immediately below there, because you've then got a protective barrier in place, and a strong one too, to protect you if the market does retrace against you in the short term. So there's lots of different lessons there, not least the volume lessons. What we're seeing right now is that reversal taking place. Doesn't look particularly strong, but nevertheless it's there. The trend dots have transitioned. You can see they've transitioned through from the blue, they've gone into the grey, and now potentially we're starting to see a transition through to red. But in terms of the trend monitor, no change for the time being. But that's the nature. If you went down to a 1-minute time frame, you almost certainly would. You'd see that transition starting first, and that's the key to this whole business. There you go. It's really defining the time window of opportunity that you're focused on. Now, if you're a scalping trader and you're looking at anything from 1, 2, 3, 4, 5-minute time horizon, you'd certainly have the 1 minute up. You'd see the transition on the trend monitor. That's where it's going to change first. Then it'll ripple through to the 2, 3 minute, and so on and so forth. On the 5 minute, on this 3 minute, there's no change at the moment, but almost certainly it will if it continues for the next sort of 2 or 3 minutes or so. Probably no change on 5, yeah, well, certainly no change on 5 and 10 at any rate. But if this is a full-blown reversal, then it will transition through into those slightly slower time frames. It's just how that is universal in terms of market sentiment and how it ripples through the various time frames. And the analogy we always use is the pebble in a pond. You throw a pebble into the pond, the pebble lands in the pond, and the ripples move away from where it's landed. And that is exactly the same. And ultimately, they will arrive at the edge of the pond. It's exactly the same principle here, and it's just a neat way of thinking about it. Just going to pass back to Anna for a moment.
And this little, this little reversal here that I said, I've got the 3 minute chart, but if you wanted, you want even faster charts, it depends what you're looking for. If you're looking just a handful of pips, then understanding this relationship here with VPA, you know it's coming to a point where it's going to reverse, then you would say that you would use that as a potential pattern, if you like, and you know, you understand the relationship between these two volume bars, those two candles, and you know it's going to, and you know what's in there, 5, 6 pips. I don't know. There are people out there who just trade 5 or 6 pips, but my own view is I'm using the 30, I use the 3, I use the Renko. I've seen there's actually, this is the trend monitor on the Renko is actually reflecting the pullback that we've seen on the 3 minute chart. The trend dots have turned red. That hasn't gone bright red. So in terms of exit, I would personally, because I like to see the bright colors. I've also got what I'm seeing here. This is on the 15. The pound is still rising. The yen is still falling. As I said, my benchmarks, my 30-minute are my benchmarks. So I'm, you know, this is my overall view of the slice of price action that I'm looking at the moment. Yes. Can you just go down to 5 minutes? Yeah, the 5 minute, no problem, no problem. But I have to accept that on the faster time frames, you are going to get oscillations, pullbacks, corrections. Now, whether you want to trade those, it all depends what you are looking to do. If you're just looking for a few a few 3, 5, 6, 7, 8, whatever it is, I look for using the 30-minute with the Renko and the 3 minute chart, tend to in generally come out with double figures. Right, would you want the 5 minute chart up? Yeah, just the 5 minute. Here we are. Yeah, are you okay? Are you all back to, is yours working okay now? Oh, fine. Yeah, I am.
Sorry, just to highlight something which is really interesting here, and it really goes back to the business of, with the CSI, choosing your opportunities, choosing those that are going to deliver for you. The reason that pound yen reversal is not particularly strong is because it's being driven by one side of the equation primarily at the moment, or certainly up to the last few minutes. In other words, it's pound weakness that is driving that. The pound is falling strongly on the, we're on the 5 minute here. You can see it there, the yellow line. Equally, the euro's coming under a bit of pressure as well. But if you actually look at the yen, it's just starting to claw its way off the oversold region and start to move higher. But it's not moving high with any great strength. It's certainly not moving at the same speed as the New Zealand dollar, the white line. And that's what you're seeing on the pound yen. So you're seeing a sluggish trend, if you will, or a trend that's relatively measured in pace. It's not moving with speed. And that's the reason, because it's only being driven on one side of the equation, in other words, the pound. The yen is really not contributing very much to that move at the moment. If we see strong yen buying coming in, then you will. But at the moment, it's a little bit weak. It's a little bit lackluster. But that said, there's still enough to develop a trend in there. And that's a key point about all of this. And if you looked at, for example, I don't even need to look at a chart of the euro pound, the orange line and the yellow line, there may or may not be a gentle trend there as well, because those two are moving in unison. So provided there is some differential momentum between the two, then there will be a relatively minor trend, but it certainly won't be anything like the trend that you would find right now on the pound New Zealand, for example, because matching the pound with New Zealand, you've got strong buying in New Zealand, you've got strong selling in the British pound. And in terms of a setup, you know, you're now looking at other opportunities. You've got the Swiss franc, the green line, very overbought. You've got the dollar at the bottom, the red line, very oversold. So if you're looking for a short-term opportunity for reversal, you go and look at the dollar Swiss. Just passing back to Anna. We're just going to switch over back onto the Ninja Trader. Yeah, what's the time now? Let's just, there we go. Draghi will be yakking forth. He does like these events because he's he's going to miss it all. Yeah, he does like being centre of attention, and it's all very dramatic and all. Well, not dramatic, but you know what I mean. I'm just going to keep an eye on the pound yen. Okay. Oh, sorry, just move that out of the way. That's on 5. That's on 10. Hopefully we're all in agreement now. I mean, as I say, you've got a bunch of currencies at the bottom and a bunch of currencies at the top. So if you're a reversal trader right now, really spoilt for choice. I mean, if I was looking, just move that down out of the way. If I was looking at that right now, you are spoilt for choice. You've got the pound, the euro's starting to fall. Swiss franc will probably follow suit. Down the bottom, you could match it up with any of these. New Zealand's dollar here, you've got the CAD starting to kick up, you've got the yen starting to kick up. Aussie's flatlining a bit, so probably not the best one. Certainly look at the dollar. That could be the dollar match to get any of these up here. And up onto 15, let's see what we've got. It's all starting to develop along the same lines. I mean, when you get this really nice divergence where you've got a bunch at the top and a bunch at the bottom, it really is a question of trying to pick out. You're spoilt for choice, and therefore you've got to try and pick out the pair which you think will deliver the lowest risk opportunity. Part of that decision-making process is what's on the chart in terms of volume price analysis, in terms of support and resistance regions. And part of it also is very much about the broad market sentiment for that particular currency. Look at the currency matrix. Is the river of sentiment flowing in the same direction for that particular currency? If it isn't, go and choose something that is. You know, that's a higher risk proposition. It may well be. We've touched on politics. We touched on it this morning. Politics is dominating all the markets heavily. And you may well find that local politics, when I say local, I'm talking about country politics, not local government and that sort of stuff, or municipal, but certainly local in terms of a country will dominate a particular currency quite heavily. And that way it may well move in contra to the general flow of sentiment purely for that reason alone. Let's just head back over onto the charts again, see where we're going. Let's go, where are we? There we are, multiple time frames, there we are. This is the Aussie dollar we're on at the moment. I just flicked over onto that. Let's just go and have a look at, let's go back and just go back to the CSIs, apologies. Let's have a look at, let's go and have a look at the dollar Swiss. That's setting up potentially for reversal. There we go, move that out of the way. Let's change this over to the dollar Swiss. There we go. Okay, okay, still bearish. We've had decent run lower, and we're looking at a potential opportunity for a reversal. We've got big volatility candle on 15 rather. Volatility on 30, down onto the VPOC on 30 as well. In terms of volume, just looking up onto the slightly faster time frames. Obviously very bearish at the moment. Certainly the trend monitor is bright red through the piece, but it's flip-flopping around here in congestion. This is 1 minute, so it's a pretty quick chart. In terms of a rally off this, the volume here obviously is all being distorted by what went on around this region with the release of the fundamental data. And now we're going to start seeing volatility come in as Draghi starts to speak. In terms of any reversal and recovery, certainly on this time frame at any rate, but the principle is exactly the same, whatever time frame you're looking at. You've got price-based resistance in here, which is relatively modest. The width of the line actually denotes the strength of that area of potential resistance, so that's modest. This is very strong, this wider, much wider. It's been tested and retested and held. So in terms of recovery, you've got light volume through to here. Up at this region, it's likely to struggle. More price-based resistance up at this level, but lighter, and then out through the top into lighter volume. So in terms of any recovery through here, this region here should move through pretty quickly before it starts to struggle again around this region. That's on a 1 minute time frame, could be any time frame, exactly the same principles apply. Let's just have a quick look at the matrix and the array. Let's just go back down here again. That's the matrix on 5, just refreshing on 10, on 15. Let's go back to 5. There we go. That's on 5. This was the Aussie dollar that I highlighted earlier on. Nice move in that. Selling of the dollar continued and carrying on higher now. So if we isolate out, let's just see what's going on in terms of the dollar on 5. Let's see if that's universal or not. Interesting. Okay, it's yeah, a little bit mixed through the mid-table here. Very strong on the New Zealand. Aussie's not bad either. So they're all up at the top. The euro down the bottom here. The dollar Swiss we've highlighted already, but not so strong against the dollar CAD and certainly against the pound. Mid-table here, flip-flopping around. This one may well join at the top end of the table, and this one may fall in due course. So it's a question of picking pairs with caution. Just head over to the array. Let's go on to a different time frame. Let's just go to 15. Just isolate out the dollar there and just see what's going on. And that gives you, again, a picture of where the strongest buying and selling of the dollar is right now. It's almost universal. You can see, you know, for a complete full house, you want to see the New Zealand dollar move up here. Strongest in the euro dollar on 15. Strongest in the dollar Swiss on 15. But it is pretty much universal. Selling of the dollar right now, and if that continues for much longer, then these will move up the ranking ladder to the top and join their brothers and sisters, and equally at the bottom here as well, as they are starting to do. As I'm talking, you can see there they're starting to line up. And the array is just such a cool indicator, because not only does it give you that information, it also gives you the strength of trend of those particular pairs by the angle of the line. So the steeper the line, the stronger the trend, the less steep, the weaker the trend. And it also highlights when those currency pairs, as opposed to currencies, are approaching these overbought and oversold regions. When they're approaching it, you saw it flash up there with a darker color with brackets around. When it's reached a potential overbought or oversold scenario, then they come up with the bright colors, pretty much like the trend monitor, if you will. So they'll come up in bright blue and obviously bright red down at the bottom here. Let's head back to the chart. Let's go to the chart, multiple time frames again. There we go. There we go. That's the dollar Swiss. We've got volatility coming in. Pretty heavy selling of the dollar. Have we got any fundamental news come out at +1? I don't think there's anything major. It's just Draghi. Okay. A lot of volume coming in under here. Volatility, so in terms of volatility, we expect maybe a retracement in terms of that particular candle anyway. The market's closed here, so we're expecting some sort of retrace up onto 3. We have the congestion. Nice example with the pivots here, defining the upper region, the lower region, the floor, if you like. And now we're starting to see it dive down. A little bit of price resistance came into play here. The market tried to rally, see how it bounced off that, back down. Now we're starting to see it develop further. Trend lines flattened off a bit, may well dive further if this continues. And up onto 5. There we go. And we're now moving down onto a low volume node. So, you know, we expect the market to move through there pretty swiftly if that selling of the dollar does indeed continue for the longer term in inverted brackets. Let's just see what's going on in terms of the indices for a view on sentiment. It's a pretty mixed. It's moving sideways at the moment. Let's pick any of these. This is the YM. This is the futures contract for the Dow. So you can see there we had some decent buying this morning, so some positive sentiment, but that's all dried up. We're now trading around the volume point of control, a really nice example of congestion. Very strong platform of support in below. Nothing much developed in the way of resistance above. You can see the volume profile associated. If this market breaks to the downside, then you've got very light volume through this region, and potentially it'll move pretty quickly. Lots of volume coming in here, you can see, and a heap of volume came in here on the release from Draghi, or on the release from the ECB rather. But as this approaches 230, when the cash markets open, then this volume will all be compressed because the cash markets are that much larger when they're running with Globex. This is Globex on its own, so this is purely electronic trading, no physical cash markets involved, so it's purely electronic, but it just gives you an idea of the relativity, if you will, of the volume profile. This is perfectly tradable. I wouldn't trade this at the moment because we're in congestion, but it's a great example of being patient and waiting for that congestion to break away. Once it does break away, volume will confirm. Volume will confirm whether it's on Globex or whether it's the two markets running together. And it just tells you, it just shows you dramatically that even though once that volume has been compressed by the two markets running together, when the Globex market is running in isolation, it just tells you what's going on in terms of market sentiment. It's all about related markets. It's what's going on in bonds and bond prices and bond yields. It's what is going on in terms of equity markets. This is all important because it will dictate what the market sentiment is in terms of the foreign exchange markets. Yeah, passing back to Anna now.
I've been kind of keeping half an ear out for what he's been saying, old Draghi, but I think apparently, yes, that one of the numbers came in slightly better than expected, some of the data. So anyway, we shall see what's happened. Just wanted to finish up on this workspace here because, excuse me, what I also wanted to say was on the 30-minute chart, I mentioned these two volatility candles, and the way we need to treat volatility candles, those of you who came on, was it last week or the week before, we talked about inside days, where basically you have a candle, you have a range, and then the subsequent candle trades within the spread of the range of the previous candle. It's called an inside day. This isn't on an inside day, it's a 30-minute candle, but you get the same kind of you have the same type of price action, whether it's whether it's triggered because of volatility or whether it's just normal price action. And we will revisit the Euro Aussie chart. It was the daily chart of the Euro Aussie where that happened, and it's been I've been tracking that and monitoring that, and it's still at the top of the heat map, and but it's still, you know, it's still looking for a reversal, and it's falling but falling gently. But to get back to the 30-minute chart for the pound yen, we had the first one here, as we can see, very wide range, big spike to the top of the candle, and you would think there's a lot of selling in there, therefore the price is possibly going down. It does go back into the spread of the candle, but look at the volume underneath it. There's not an awful lot of volume under that candle. Next candle, again, is price action, even wider spread, slightly more volume, but it's the fact that it's a volatility. It's outside of its average true range. It's this candle. This is the down candle, which is the sort of correction, as I've said, from the break from the volume point of control. It is moving away, but boy, is it volatile. And we've had the spread back into the spread of this candle. And the way we have to treat this candle is essentially if you've missed all this, you've got to wait for a clearance of the top or the bottom. It can carry on. We could get subsequent 30-minute candles that simply stay within the range of this candle, possibly with a, you know, continuing with a bullish bias, as it were, but essentially moving sideways. Now, how this translates into what we see down on the 3-minute chart, this is the pullback that we saw. And David highlighted the two candles here with the anomalous volume underneath it, which gave us the first hint that we were going to have a correction. But we know we were going to have a correction because we're trading within a volatility candle. So the VPA was simply confirming what we can see on the 30-minute candle. And what we now have to wait here is we had a lot of volume coming in here on these two candles. We've got very clearly defined resistance line. We see 137.67. What does that correspond with up here on here? 137.59. It's really this R1. Where are we here? We've got 137.61, 67. It's getting towards the top of these candles. So we know what price has to do to get over, to carry on higher, as it were. Now, interestingly, what's happening on the 30-minute CSI? The yen is still falling. Let me just take all the others out at the moment, because earlier this was being driven asymmetrically, as we can see, by very, very strong buying of the British pound. It's kind of, as you can see, it's sort of flattening off a little bit. But what's driving it now, I would contend, is that the yen is falling. This is, you can see the angle here, which is a very sharp angle. So if you like, it's keeping this pair in kind of balance, as it were. And moving back to the Renko, the VPOC is dynamic. It will move up and down when it feels that it's moving into a congestion phase, and sometimes it will move lower, sometimes it'll move higher. But as I said earlier, I'm waiting for a bright blue. I haven't got a bright blue. I've had red dots, and now I've got blue dots. I'm going back into blue. But I still have to be aware of support and resistance. It needs to get over here. It needs to get over 137.63, 137.67 that we saw on the 3-minute chart. So going right back to what I said earlier, where we have a confirmation of the colors of the blue and the blue trend monitor. Kept you in all through here, through this congestion. We did have a couple of red dots, but they were at the bottom of the little bricks. It carried on higher, a little bit more congestion. This is also reflecting what we have on the time charts. So then we have this little nice run up. This is the pullback as seen on the 3-minute chart, and it's quite a substantial correction. It's not just a few pips here, but it's still holding. The trend monitor is still holding. We've had this, as you can see, it works in real time. It doesn't repaint. We have a lot of questions from you. Oh, do your indicators repaint? Well, no, they don't. They actually work in real time, as we can see here. The VPOC has moved up again because it's kind of it's picking up that this is not a congestion phase, but there's a lot of price action going on here at the moment. So let's take that down. We know where this is. This has got to clear to continue higher, and if it's going to be driven, possibly going to be driven by the yen, and the yen is going to be driven by the overall market sentiment. And we can go and have a quick look at the, let's have a look. Let's have a look. Well, we've got the S&P still holding up. It's at this Globek. It's still positive. Put it that way. It's not negative, as it were. If indices were negative, then the yen would be bought. Somebody pointed out when we said, oh, is there any news? What we should have said, is there any significant news? And yes, there has been some Labour news, but not sufficient for moving the market in any great way. All right, let's have a look. I think I'm going to have to stop, because those of you who came earlier will know I've had sort of the flu for the last week or so, and I really don't want to inflict my awful coughing on you. I'm going to keep an eye on the pound yen to see whether it's that it can clear that resistance, and to see whether this is going to go higher. That's it. We are back later. We're going to be looking at the indices in more detail. I hope you've enjoyed what you've heard today. We are back, but we are back next Wednesday. We're going to move the webinars to Wednesday for various reasons. Thank you so much for coming along. As I said right at the beginning, if you need any information on anything we've sent, you can either drop me an email, Anna@AnnaCooling, or you can drop an email at david@davidcooling.com. So enjoy the rest of the trading day, the rest of the trading week, and we'll catch you next time. Bye.